The sell-off on Wall Street extending to a second straight day Tuesday. The S&P 500 now down more than 3%. Again, this time Tuesday afternoon. For perspective, we're joined by Max Wolff. He's a strategist at Multivariate. Welcome back, Max. So I was looking at the, I know you always take a look at the technical indicators. What's that telling you? I just saw the RSI hitting that's overextended.
So yesterday was a day after which many folks needed a sort of stiff drink and a little reassuring in whatever form that takes. Drink wouldn't have to be alcoholic, by the way, but might be for a lot of folks. Maybe some new to the drink as well after yesterday. But it looked like short-term things were a bit oversold, and so the statistical probability, plus 62 or greater percent that you'd have a bit of a bounce back, probably buoyed some opinions, but it didn't buoy them into the open, because well before the sun came up, it was pretty clear that the markets weren't going to do the same thing. And then today's had a pretty unnerving pattern, just things continuing to fall through a couple of different supports, and some of what has been the leadership in the indices and overall market and the tech space actually flirting with the technical correction zone or going right through it at 10% plus losses. So clearly there's some momentum to the final factoring of fear. And I would say only that we wondered why this didn't happen before, when the rest of the world was afraid of coronavirus and we thought it sounded like a nice after dinner element, Corona, and now we kind of caught up to the fact that, hey, this global news story of 2 months might be real and might be here.
So is the market then overdue for a bounce in your view, or based on what you're seeing today, the negative momentum that we're going to see more selling over the next few days?
So the big question for us is, are two things finally happening? Is the United States realizing that it's part of the rest of the world and that the Federal Reserve and a bit of water don't actually mean that we can just sort of ignore global events? Or have we found that thing that freaks everyone in the market out because it's pretty hard to even see the president successfully jawboning Mr. Powell into solving coronavirus with monetary policy? So this is the intrusion of political risk, which has been constantly growing and unfactored. It's the realization that there are things the Fed can't do. And I think it's the realization that a global epidemic is perhaps a bit of a black swan, but like black swans, it does occasionally show up on shore and probably needs to be factored when it starts to have the destructive potential that we can clearly begin to see here in the coronavirus.
So if you say destructive potential, is it possible then if you've got cash on the sidelines, don't put it to work yet?
Yeah, I think it's tough. I mean, you'd have to have quite an iron stomach, and the indicators aren't so good.
Do you sense that investors sense fear at this point, or not yet?
I think we're beginning to see it. I think some segments for sure. I think if you're in the airline industry, if you're in the hotel business, I think that's a little bit unnerving. I think the global autos are probably a little bit unnerved by some of the sales indications coming out of China. And I think for a lot of people who haven't factored globalization, I mean, again, this is another opportunity. We are deglobalizing a world hooked on earnings, multiples, and growth potentials that all assume globalization. And I think, to me, more distressing than the coronavirus, terrible though that is that it has fed this anti-globalization, has fed the notion of the foreigner as a risk and problems being imported and countries unilaterally sanctioning and quarantining and blocking each other's citizens, which are all pieces of the deglobalization that I think is the big risk unfactored by today's high multiple blue chip index leading shares.
Deglobalization. In terms of what are the risks that we get a 10% correction at this point?
Well, I mean, for a lot of folks, they're in that territory or near it. Depends on sort of where you are.
Well, what does S&P say?
Yeah, so the S&P, I mean, one or two more days, one full day of this, especially if you have a chart like today, where the sort of gloom accelerates. So there hasn't been much of that mid-afternoon bounce that we're often used to as sentiment kind of rolls over. I think that would be pretty bad because I think you'll have gone through a whole bunch of technical supports and you'll have disavowed a bunch of people, right? And I always remind people, the 10-year look backs and a lot of the documents, a lot of the ad material no longer include the last real trouble patch. And a lot of the folks on the floor, given that the job has changed, have never seen anything except for the last 10 years. And the last 10 years, the equity markets, or 11 years, have gone straight up. So there could be a little bit of a kind of depth of experience check in the market and some of the market decision makers. I'm not sure we get an A+ on that if we have to suddenly face that pop quiz from the markets.
Okay, deglobalization, that's going to be buzzing through my brain. Thanks a lot for your thoughts, Max.
Thank you.
Our thanks to Max Wolff of Multivariate. I'm Fred Katayama, and this is Reuters.